The results are in, and the Fed has cut 25 basis points, just like we were expecting. The market, not too much of a reaction there, but we'll be going through everything else that's happening with the FOMC presser, with Japan, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice. So please do your own research before making any buys or sells. Kev, we had the result that the market was expecting, the Fed cutting 25 basis points. Not a whole lot of volatility there. We saw a little bit when Powell was speaking, but that's mainly bounced back. We're seeing a little bit pretty flat on the day. I think that the market's still kind of digesting it. And now, once again, it's just wait and see. Wait for the next data point, wait for the next unemployment reading, the next inflation reading, all of that good stuff. Meanwhile, we do have a Bank of Japan meeting this evening that I know that you are probably watching more closely than anyone else in the world right now, especially anyone who doesn't live in Japan. So we have that going on. Not a whole lot of other data this week. So I think it's kind of an odd time in the markets, but how are you feeling today? What'd you think about another yawner of a Jerome Powell press conference?
Yeah, man, I gave up like 2 minutes in. I listened to him. I didn't listen to any of the questions. What can we expect from Powell at this point, right? The tie was purple. We got a 25 basis point cut, which is honestly, if you put this in the context of the election last year, the last time they cut, and today, shit's worse today, and they cut less. Which the inflation number is also going up higher. Jobs are going, the job reports are looking pretty weak. So that's stagflation right there. I mean, that's, without being said outright, it's kind of what he was hinting at, right? I think from what we've seen, what we've heard, he's not gonna do what Trump wants, right? I was talking to you before the show. Trump put out a great tweet calling it a tiny basis point cut, and if he were in charge of the Fed, it'd be 100 or even a 200 basis point cut. I love that. Would be hilarious because that's it, folks. Like that's it for probably the decade if that were the case. But we're just kind of coasting. We're still coasting, and Jerome Powell didn't scare the markets. The markets didn't react at all. Volatility is still compressed. Today is a volatility expiration for contracts. Friday is OPEX. So honestly, looking at this, I think it's a nothing burger into Friday. I think the markets either rally or they stay flat. I don't think they're concerned as much. They kind of got a little bit of a gift with this 25 basis point cut. I think that gives them more of a reason to rally since there's no concerns necessarily outright. Doesn't mean that it can't reverse, in the near future, right?
Yeah, looking ahead, I mean, there is not a whole lot. We're out of earnings season. We have a few data points coming out the next few days, but not anything too major. It won't be until Friday, the last Friday of the month, the 26th, when we get the next PCE reading, that we could see some data-driven volatility in the markets. And maybe it's just a bunch of chop until then. Like I think it's Leroy. Good to see you, buddy. We've been, markets haven't been too interesting, so we've been easing back. My kids back in school, all that jazz. Anyway, I think that there is really. Maybe we get some headline volatility, but I think the data volatility is going to be kind of chilling for the next 10, 8, 9 days. So maybe Japan dictates a bit more of what is happening in U.S. markets. Maybe we see things slowly churn up without the expectation of, looking at the futures probabilities, and it's, 80, 90% chance of a 25 basis point cut at each of the next two meetings. So it feels like the market has priced in that we're going to see another 50 trimmed off by the end of this year. I'm still watching the housing market. We're seeing mortgage rates come down. I think the lowest since October of last year. So promising there. But what do we see the strength of the consumer in some other data next week? Like, I think right now we're just kind of in this really boring period where you can kind of just use it as some time to figure out what your next moves are going to be based on what this data shows.
Yeah, I think the only wild card event that could move the markets is if there is a government shutdown, right? They're not necessarily talking about it, but we do know that the vote, I believe, is on Monday. Whether they shut down at the end of the month could happen. Not saying it will. Usually it's a nothing burger, but there is always that opportunity, especially with, VIXX and OPEX this week. The rates out of the way, you kind of know. And again, when the Fed does usually cut, there is a bit of a pullback. Obviously, it usually hints at the top of the market, but things can change. This time might be different. I don't necessarily think it is. I think that we are just feeling this. And there are other things out there that are showing that there is extreme liquidity constraints out there. I'm going to actually pull up a chart real quick. That is the reverse repo. It has hit the lowest level in over 1,600 days. Why is that important? Well, the reverse repo is kind of where we borrow cash, throw it into the treasury market. And given what's happened today, it's actually really interesting that this is kind of going to zero. It's down 25, almost 26% today. It's down at 13.96 billion. If we do go to zero fairly soon, it'd be funny if we go to zero and we get a government shutdown. You're talking about no liquidity anywhere. It's game over. Like, I'm just letting you guys know that is one black swan potentially. Doesn't have to happen, but with this going to zero, government shutdown fears, it's almost like a 2008 scenario where, Nancy Pelosi was like, yeah, we're not going to shut down. Government shuts down. And then you had that massive downside October. Does it happen this way? I don't know. I really don't know. But this is a sign that we are getting pretty close on there being zero liquidity or more liquidity out there that we need to push the markets up higher. You're kind of seeing that in the bond market as well. It's completely green right now. Everything's going up from the 2-year on, right? You're seeing green bounces going a little bit higher. This is a 20-year, 30-year. It's not necessarily pumping to the upside, but it's not going down, which you would kind of anticipate with a rate cut, right? People locking in some of those higher percentage gains. You are seeing this, though. This is going to be a fun chart we're going to continue to watch. This is the short-term liquidity chart, which we can kind of equate to what's going on in the bond markets, the 3-month. You can see that it pumped really high, so people were dumping it a few days ago, most likely in Asia. Came right back down. Even today hit a low of 3.94. We've said this in the past. Whenever this rolls over in fast succession, you are looking at potentially a crisis, right? This is March of 2020. That would have been a huge rollover there. I think in 2022 as well. Or no. Yeah, I guess into the end of the year for the elections, we did see a bit of volatility, which led to right where it bottoms out, which is essentially the big VIX spike that we got in December of last year, literally to the date. So this is going to be another one we continue to watch. The yields are showing some signs of, no one necessarily wants to lock in yet. Probably should be, in my opinion. Again, not financial advice, but just some things that are out there that show that we are still in a low liquidity environment and the markets might not be pricing in that as much as they're pricing in, say, the rate cuts or, future Fed policy. And we know that we're in a really weak economy. Doesn't mean that the market needs to be selling off because the economy is weak, right? It's all about liquidity. And, we could see unemployment rise and the market still churn a lot higher. It really depends on when you just stop seeing the flow of capital and then you have to start selling off to pay off a lot more debt.
GM, Mr. House, good to see you. Appreciate you being here. And, there was some discussion I watched a little bit more of the presser. There was more discussion around AI and how that is impacting the job market. And I think that is another bullish point for earnings in the future and valuations going higher is, the need for less salaried employees is going to help the balance sheet. Like it's not good for the job market, but it is good for earnings. So, and that's what people are looking for in the markets. I think that's a bullish scenario. You have all of this money still in money markets that will flow out of there to some extent as rates come down. Like the reason that they have been having all-time high balances in money market accounts is because the rates have been over 4%. Like that's a pretty nice place to be. But if we continue to see the rates come down and then they're trading sub 4 in the mid 3s, low 3s, people are going to be a little more incentivized to move that money into risk assets, depending on how, maybe that is a spot where the market makers decide, off with their heads, and we see a big move down. But there are still some bullish scenarios out there, even with valuations being at these crazy high levels, bubble territory from previous cycles. But listen, not everything is going to repeat, right? Like
Right.
it'll be clues there, but we still have certain things that are pointing to like, hey, we don't. And it was funny, they were asked about inflation. They still have no idea how the tariffs, like, there's been less tariff talk lately because there's been so much other shit going on, but still not really sure how the tariffs are going to impact inflation, if it's going to be a short-term impact or a more sustained one. So we have to keep that in mind, and that is going to also determine a bit of what the Fed is doing. So a lot of questions out there, far more questions than there are answers at this point.
Yeah, and let's be honest, a lot of this churn to the upside in the equity markets can be inspired by fraud, if that's a nice way to say it. We know that the SEC is looking at two major changes in the past few days. We've gotten one of them pertaining to earnings only being released every 6 months as opposed to every quarter. So every 2 quarters, you'd get the earnings report from publicly traded companies, which honestly, you could hide so much for a lot longer if that is the case. Terrible for retail. I would never short again in my life if that were the case. If that ever came through, like, it would be the biggest Ponzi bubble. Maybe it leads to the biggest bubble in like 2036, and shit just hits the fan. And it's the Great Depression then. Maybe right now is the bank crash of 1913. Who knows? But I think that with that, and also the other one, which is more so into what we're going to talk about next, which is the short squeeze with GNS, is they're trying to allow brokers to sell you or give you an asset price at the lowest value traded, as opposed to what's being the lowest value on other exchanges. I mean, they're not using other exchanges value. They're using their own exchange value to give you the lowest price possible when it comes to market orders. So even if they can make a trade at the value that you kind of put in, even at a limit order, they will take the lower value one and pretty much take the profit off of that. So it's a big thing that the SEC is kind of like looking into. If they pass it, I don't know. I wouldn't trust market orders ever again as well. Like, these are big things that could happen, especially if you're trading a lot or you're selling off a huge position. I mean, honestly, if you are selling off a huge position, pick your limit price and sell it that way. I think the market order, and again, this hurts retail because retail doesn't necessarily think about buying in terms of limits. They're just like, let me just invest 5,000 right now at the current price. You're not going to get the current price. You're going to get scalped a little bit there. So that's a huge, huge problem, and also allows the fraud to kind of go up. Everything is going to just be more and more complicated as prices go up. The one thing I do want to show here is GNS. We've talked about it in the past. That's the Genius Group. Heavily shorted stock. But the reason why I share this, given what's happening with the reverse repo and rates being cut, if there is some type of reversal in the markets, we have to look at where money might flow into. One of them I've been looking into is GNS. I do have a pretty sizable position on it. They are pretty much a Bitcoin first AI education company. That's what they focus on. They have a Bitcoin treasury, and I'm not the biggest Bitcoin I'm bull right now. I really am not. I think it's problematic. That being said, we did find out that the short margin interest to cover is 400%, which is absolutely insane. So if you guys remember FFAI, another stock that we talk about, when that squeezed from $1.50 to $160 within a matter of like 4 days in May of 2024, the short interest margin was 96%. This thing is 400%. They announced that the company is doing buybacks and they're DRSing, direct registering their shares, meaning they can't be lent out through naked shorts to short this stock more. The float currently is 60% off of exchanges, and they're going to be 70% by the end of the buybacks. So what they're doing right now, a lot of shorts, they're shorting this more because they can't start buying it up. If they start buying it up, they're screwed. This is one of those cases very similar to GameStop, where if the price continues to go up, it might not stop going up. Why it's important? Low liquidity. You can't necessarily cover too much. You can't short more. Price is going to start going up, and you know that how much that is off the exchange. You're talking about potentially GameStop 2.0. So this is one that we're going to keep watching. Again, you're shorting it more. The more they short, the greater the breakout is going to be. This is a retest, in my opinion, of this wedge that it broke out of. If it does retest it, say the market does pull back a little bit, and then we get 70% DRS, there's a good chance that we could see some of these short squeeze stocks start to fly. And if this flies and GameStop starts to pick up with their warrants that are currently out there, I would honestly be concerned that there might be a lot more. We might have this Volkswagen 2008 scenario where there's all these short squeezes in things that you wouldn't expect. And, there's a lot of money flowing into these mainly because they need to cover. So that's the one stock that happened this week that we got a lot of information on. We're going to continue to see what happens. But again, the more they short these stocks right now and the reverse repo is dropping, we're talking about potential for a huge catalyst that can move a lot of these things to the upside, to the downside, and extreme volatile movements.
Let's go into crypto to wrap it up today.
Sounds good.
We're seeing kind of flat on the 24-hour, on the daily here, but I still think it's worth looking at. I mean, one of the few green spots I see is USDC and USDT dominance. I think people there's a little bit of sell the news today, but nothing significant. So where are you looking in crypto? And, like I mentioned, with some of the lack of catalysts in the market, where do we view things as going over here in the next week to 2 weeks?
Yeah. It's strange, right? Obviously we're overbought on the daily. The MACD has been very low volume and it looks like it's starting to roll over, in my opinion. The volumes are starting to get lighter and lighter. If that's the case, then we're probably looking at a little bit of downside for BTC. Bitcoin dominance still relatively at a point where it might be sideways trading. You want to see it break 57.12 if you want to get that alt market or the alt season rally. I don't know if you're going to get that or not. There's a good chance too that if this starts to roll over, we could just kind of trade sideways and people pull into Bitcoin. Again, we don't necessarily know what's going to happen. If the market does pull back a significant amount, Bitcoin might be the safe haven. We don't know. It was in April. If we look back, it happened in April. The market didn't necessarily, the market pulled back a lot in TradFi, but you can see that for the most part, Bitcoin climbed. It went from 74 all the way to, early May, 97 or so. So you might get people who think the same way. Maybe the price stays up, relative to where we see the rest of the market pulling back. And maybe Bitcoin pulls back later on, maybe after the first of the year. I'm honestly speculating. If I'm looking at this in the short term, it's kind of weak that you're not putting in a new high. You kind of look like you're, if anything, maybe this is wrong too, but this kind of looks like this type of bullshit megaphone pattern, right? So maybe there is one more push up higher to 128, or it could just break down and we're looking at, that 98K level. You're definitely trading within a pattern. I'd like to see confirmation of this higher end. That probably means that is closer to the top than it is to the bottom. But I'm not sold on the idea that Bitcoin is, going to crash instantly unless that Michael Saylor, theory comes to fruition. I think that if anything, Bitcoin has a lot of people are still really trading Bitcoin and there's still fair volumes for it. And even if the market is weak in itself, people might speculate that this thing stays afloat. I think that's dangerous because you are speculating, but I don't have any real thoughts on Bitcoin short term.
Let's take a look at a few alts then. I mean, ETH is still holding up pretty strong, right around 4,500. We saw Sol take another big move up. It had a daily close in the 240s and it wicked all the way up to 250, got rejected off of that. But, we do see some of these alts continuing to show strength. Will that, is that going to keep pushing forward over the next few weeks? Is the big question. I don't know, man. We saw the rejection off 250 for Sol. Is it really going to make a new all-time high this year? Is a tough question to answer right now, and I'm having a hard time seeing it. But I'm wrong all the time, so who the hell knows?
So
you just counter trade me there.
That's why I said, with some of these things, the less trades is the better. The more less trades you do, sometimes that is the best thing. I see a head and shoulders right here on the ETH daily. If this were to be real, you'd have to come down to roughly about 4,000, maybe get a bit of a bounce, and then you lose that 4,000 level. That would be my opinion from looking at ETH right now. I could be totally wrong too, right? This could be a parallel channel that just grinds higher, and we just haven't necessarily put in the top end of it. But for now, I'm going to say this is a head and shoulders pattern. If we look over to Solana, I'm very happy with how this came out. It went higher than we probably expected, 250-ish around there. Maybe a bit of an overextension, but this is an ABC wave. And, you had your 5 waves down. This is your 3 waves up. I would expect 5 waves down. It doesn't have to go down to $10 or so. But probably like $20 or so, it would be a really good pullback in Solana over a period of time to finish out that 5 waves. But how much higher could it possibly go up here? You would need it to break structure. It would have to go higher than 294. Do we think that can happen? I don't know. That's why I don't short this shit. The reason I say that is because you could have an insane amount of USDT just pumped into the system. I will say I do think alts are in a worse place just because of Bitcoin dominance in general. If we are going to see any type of pullback, I think the alts, obviously, they bleed a lot harder. If Bitcoin starts going down with them, hold on 1 second. Oops, sorry. Then you're going to see Bitcoin pull back just as much, but alts are going to bleed way harder. So Bitcoin is very confusing for me right now. I'm not going to act like I know what's going on there. It looks like it's just sideways range trading. We haven't got any confirmation to the upside or the downside. That 112 to 115 level has been crap. But I do think we've seen some kind of scary signs on some of these alts. Solana, I think that this is the end of that wave count. I think that's a 5-wave extension within the C wave right there of the ABC correction. I expect 5 waves down for that. And if that's the case, and we're seeing the head and shoulders on ETH on the daily, and it looks like it's a megaphone pattern right here, then you're probably going to be coming down to the bottom of that megaphone pattern. If you don't hold that, then you're coming a lot lower. I don't think it's going to come much lower than that. So I think, 877 was the lowest that we got during this cycle. Maybe you get a little bit higher than that, and that's where you buy some ETH, and it's kind of over from there. The bottom is put in, but we don't have that type of confirmation yet. Nothing has said to us right now that this thing is going to roll over instantly, but there are signs that there is some perceived weakness coming soon. Question is, how long can it stay up here? That's the problem. It's all speculative right now. Liquidity is the only thing that can answer that for us.
All right, that is going to wrap it up for today. Appreciate those of you who joined us. Leroy, Mr. House, anyone else who is watching. If you have not yet, do us a favor, hit that like button, subscribe to the channel. We'll be back sometime. I don't know. We're not in a super structured rhythm right now, just with how the markets are. But
whenever shit happens,
when shit goes down, we will be here. Appreciate you all. Have a great rest of your week, and we'll see you next time.
Take care, everyone.